Hey guys, the stock market's about to crash and it's about to happen very, very soon. Now, we are in a period right now where corporations are under massive amounts of corporate debt. Now, you may be asking, dude, year after year, corporations have been making billions of dollars. What do you mean they've been under a lot of debt? Well, here's a couple reasons why. Hey, when you go purchase a good or service from a business here, a majority of the profits, yes, goes back. They're reinvested back into the company. Maybe they buy new things here. They invest in new infrastructure here. But the vast majority of their profits goes towards their shares. Now, you may be asking, wait a minute. Why would a company go in and buy their own shares? I mean, well, some people may say, well, maybe the company is confident in what they're doing and things like that. That may be true, but here's another reason why. A lot of these executives that work at these companies, well, the way they get compensated is how well the stock market or the share prices of the particular company is doing, because that's how the investors get paid. And when they get paid, these executives that manage the company make tons of money. Now you may be saying, okay, dude, they are reinvesting back into their own company with their own profits. That still doesn't explain the amount of debt they're in. So here's the thing. The one thing we're missing is the Federal Reserve. These guys control how interest rate works in this country. And recently, they've lowered interest rates so low, it's been ridiculous. Now, what they've been able to do is allow businesses to basically borrow money for next to nothing. And that leads to poor investments. Now, what do you think these executives are going to do who are mainly compensated on how well these share prices are going to do? Well, you think they're going to take a lot of those loans and invest in infrastructure that's going to make the stocks go better? Oh, some people may say that, and some businesses do that. But the vast majority of corporations, especially the ones who are looking for bailouts right now, are the ones that took that same debt and bought back their own shares, artificially increasing the share value, essentially. So now you might be asking, what kind of consequences does this have? Well, it leads to things being moved in different places to try to save a buck to go back into going in this, because then these guys make way more money. The more money goes towards their share prices. Now, the second thing is you're going to have another wave of unemployment. You're going to have another wave of record layoffs. As people are going through the situation that we're going through right now, a lot of companies are finding it hard to survive. Now, here's the thing. When you, the worker, go to a business, you're expected to produce. You're expected to produce something. Maybe it's a house, maybe it's a car, maybe it's something else, right? And we, the consumer, would come in and go ahead and purchase your goods or service, and then the money flows right back to the worker in the form of compensation. Well, when you're in a period right now where over 30 million people, well, I really think the number might be 50 million people unemployed, guess what? You don't have many people producing anything. You don't have many people in the market going out to produce anything. And with people more and more staying at home and ordering things two different ways, well, guess what? You don't have too many people going out and purchasing things. So what happens is you have a limit in supply, and also you have a lot less people with money. Now you may be asking, Drew, I am very confused, because last I checked, the stock market was booming and it looks like it was going higher and higher and higher. So when you're telling me that almost 50 million people are unemployed, we got limited supply out there, and yet these companies are doing well. I'm not understanding you. Well, here's a couple of reasons why the stock market's booming right now. Well, first things first, you've heard about the big $500 billion bailout plan the Fed gave for the Fed has for some of these companies out here. Well, that also has a huge influence, because some of that money directly through certain subsidiaries flows right back into what we call junk bonds. Now, anytime you hear the word bonds, just think debt. Corporations are essentially getting their debts bought by the bailout money who is being handed out by the Federal Reserve. Another thing, the reason why the stock market's booming right now. You got a lot of people out there, especially people in the media, that are telling you like, hey, look, man, once this thing lifts up and everyone goes out, everything is going to go back to normal. I don't know about you, me walking out there and seeing the way people are reacting right now, do you really think that the world's ready for another Packer game right now, everyone huddled together? I don't think so. I don't think the world's going to move back to the way things are going to be. I don't think things are going to return back to normal. So what happens if people start to go out there and all of a sudden businesses are, requiring certain things and certain limitations, or consumers just don't want to go eat at that restaurant anymore, or maybe consumers don't want to go interact with that activity anymore. What happens to that business? That business also shuts down. So people who are expecting that after this thing lifts, that things are going to go directly back to normal. My question for you is, what if it doesn't? And third reason why the stock market's booming is because we have what's called retail investors. Now, what's a retail investor? A retail investor is someone like you or me who decides to go open up a trading account, maybe like a Robinhood or something like that, in hopes of trading stocks and making money. Now, these guys operate off of what's called buy the dip mentality. Now, here's the thing. There's an old saying on Wall Street, right? When the retail investors show up to the stock market, the game is over. What does that mean? Well, these guys generally aren't supposed to know what the heck is going on. These guys are just like the average Joe, doesn't know the PE ratios of most of these companies. They don't know that this stock market that they're looking at, that they're running into, is still overvalued. They're not watching what these big institutions and what they're doing and what they know. Think about it. Everyone knows Warren Buffett, right? The biggest investor in the world right now, right? What is he doing? Well, he just sold off over $50 billion worth of shares in Boeing or in other airline companies. Now, would he do something like that? Maybe he sees something in the future that might be happening. I don't know. But these guys are yet less at the point where the market is about to hit the lowest bottom. These guys are here to buy it at the highest highs. So essentially, right now, we have a situation where not only Fed's influence through buying junk bonds are artificially influencing the market, we have people who are hopeful that things are going to instantly return back to normal. People are going to start spending their money once everything return back to normal. And we have these guys over here who believe that stocks right now couldn't be at the best discount. So they're jumping in to buy. Guys, here's the thing. You couldn't be further from the truth. The market right now is very dangerous and it's at the tip of collapse. I just explained to you, there are millions of people unemployed and there'll be millions more who are going to be unemployed. Remember, they're not even counting the people who haven't filed or who have filed but haven't gotten a response from this thing yet. So more layoffs are going to come. So if we don't have people out there who are productive, none of this makes any sense. None of this makes any sense. So what are some key points that we can take away from this, right? Well, first things first, don't do what the masses are doing. If someone on Instagram is telling you, hey, buy this share of USO, they're going to do well, right? Don't listen to them, all right? Do your own research with your own money because time is getting tough. You can't afford to throw money around, right? And the other thing is use the limited time you are given to prepare. What do I mean by that? Guys, we're going to be having another check coming soon. Everyone's going to be fed a lot more money now. So use that to your advantage. Use this time you have to prepare yourself, for your family, for your close ones, if you're going to survive that way, because we are headed towards a bumpy road. And here is what else you got to do. You have to do what the big guys are doing, okay? Do what the big guys are doing. Spend less and stack up cash, okay? I was just talking about Warren Buffett, okay? The biggest investor in the world, right? He's selling his shares. Right now, he has a cash pile of $130 billion. That's more than he can buy most companies outright with that kind of money right now. So what is he doing? He knows that this thing is going to drop lower than what people are doing right now. So these retail investors who are fueled by greed and thinking that stocks are at a discount right now, you better wake up and listen. Watch what these guys are doing, okay? They don't think it's the right time to invest. You shouldn't invest in that market either. But I'm not here to tell you what you can and can't do. And last but not least, don't let the fear of missing out cloud your judgment. Do not let greed take over. Stocks are still overvalued. Take the time to protect yourself. Take the time to hedge yourself against what's about to happen. Guys, with the amount of money these Feds guys are printing right now, we might go into a situation where we might reach hyper or inflation or hyperinflation by 2024, 2025. It's gonna happen, okay? The debt is almost at $30 trillion, guys. There's almost, how are we gonna pay that off? People are gonna be asking this question. So if you are wise right now, take the time to understand that stocks are overvalued. Cash is overvalued, and you need to start taking steps to getting your money into safer assets that's going to basically make sure that you avoid the catastrophe that's going to happen. And last but not least, ever since starting this and doing these videos, my page Deviant Core has gotten to over 5,000 following. I really appreciate this. I did not expect this starting out and doing this. So this is very awesome. And all I'm asking for you guys is to, if you find value in this video, share it, because there are a lot of people out there who are making terrible decisions that it's not going to work out for them in the long run. Thank you.